Let's get Deirdre Bosa with more details in Tech Check. Hi, Deirdre.
Hey, Kelly. So Minimax, it follows a string of blockbuster AI debuts in China. There was more Threads coined, China's answer to NVIDIA, listed in early December, up 500% in its debut. And then another chipmaker, Meta X, just recently surging nearly 700%. You had Bayern jumping 80%. Both of those are chip makers. Now, Minimax is expected this week, and Jipu AI, that's another model builder, in the next few weeks, which means that increasingly China's AI boom, it's showing up in public markets, forcing price discovery, real-time feedback on how much risk investors are actually willing to underwrite. Now, part of that is capital. China's late-stage pool is smaller, and so IPOs are one of the few ways to raise real money. But in the U.S., it's the opposite. The most important AI companies, they can still tap deep private capital. So the core of the AI race, that's model builders, it remains locked up and privately priced. And that means less visibility, more guesswork, and less access for ordinary investors. Take OpenAI. It's now one of the most valuable companies on the planet by private valuation. But investors, they're left trading around it. They have to guess how much of OpenAI's value is durable or already priced in or circulating between the same few balance sheets. Chinese investors, meanwhile, they now have a pure play AI trade that includes a new generation of chip makers and the model builders themselves, like Minimax. That is coming through, perhaps in performance, Kelly. The Hang Seng, look at this, outperformed the NASDAQ last year by nearly 10 percentage points. We know how important the AI trade is to any market. And it's really the U.S. and China that'll be neck and neck this year. And you're seeing more companies go public over there.
So it's kind of two things. Number one, obviously, just the rise of AI, and Chinese have a lot of innovation, a lot of startups, and they're taking advantage of that. But number two, as Seymour was telling us last segment, is the Chinese authorities basically allowing that, I don't know if we say encouraging, but certainly allowing this to happen and going from putting a boot on the neck of the tech firms, it sounds like, to kind of allowing their proliferation, perhaps with a cautious eye, kind of like a parent cautiously watching. But is that shift real?
Yeah, I mean, that's too soft. Allowing, encouraging, I would say propping up, creating artificial demand. It's much more than just encouraging. Absolutely. I mean, you see these chip makers and more Threads that is, coined NVIDIA or China's answer to NVIDIA. A lot of that demand is being sort of forced and routed through Chinese companies because Beijing says that they have to use domestic chip makers. You see that playing out as well for NVIDIA, right? Chinese government wants to say which companies are able to actually access those advanced chips, the H200 GPUs.
Yeah.
Companies want them, but Beijing is sort of encouraging them and saying you've got to use domestic homegrown chips. And I mean, that's tough, but it also actually really accelerates that push, and we've seen a lot of progress.
They need something other than buying empty condos to make a buck. Maybe this is the answer. Deirdre, thanks very much.
Replace the ghost towns.
Yes.